Hello, YouTubers, friends, compatriots, bootlickers, shells, desolate stars, peasants, vassals, bankers, bankers who are scum, bankers who aren't scum. I'm a useful idiot. Today I want to talk about what has come to be apparent, that there is a permanent bailout state. That is to say that our government, the Federal Reserve, and the banking system have arrived at a permanent bailout system. And the financial system is set up that way, and those are the players. And a couple stories have come out recently that reconfirm that. Although I've done numerous videos on this topic, the bailouts never ended. And as it turns out, now we can look back over the last couple of years and really assess the situation. But two news stories came out recently that reconfirm, in no uncertain terms, that we live in a bailout state. And of course, leading up to this, the fact that here it is, 5 years later, supposedly everything's back to normal, and they won't go back to changing the mark-to-market rules, the very foundation of our banking system, where the banks had to actually mark the true value when assessing their books, the true value of their assets to current market values. And that was suspended 5 years ago, so they can say whatever they want as far as the values, what's on their books. And then the other part of that, directly related, and this is part of the permanent bailout state too, is that when the Federal Reserve buys all these crappy mortgage-backed securities from the banks, they're giving these banks 100% on the dollar on these things. And certainly there's a little haggling going on between the Treasury and the banks and Fannie and Freddie, but for all intents and purposes, the mortgage-backed security buying is another bank bailout. And well, and of course, directly it is too as well. As the Federal Reserve continues QE year after year after year, buying up more mortgage-backed securities and buying more treasuries. So a permanent bailout state for the U.S. government as well, but that's a whole other topic. So the studies that have come out recently are, one is about how much the government subsidy to the banks, knowing that the banks will be backstopped by the U.S. government, the U.S. taxpayer, allows them to get lower lending rates. And there's actually two studies that have put a number on that. So when this new study came out, I was a little skeptical about their methodology. And there's two researchers, one from the University of Mines and one from the International Monetary Fund. And they said that how much the subsidy lowers the bank's borrowing costs, and they put that number at 0.8%. That may sound like a small amount, but when you're talking about these kind of numbers multiplied by their total liabilities, it's quite a advantage. Certainly much more so than the smaller players. So that subsidy total is confirmed by a study done in 2009 by the Center for Economic and Policy Research. They wanted to put a number on the subsidy, and they came up with the same figure. So I think we can believe this number. And they say it is worth $83 billion a year in subsidies for the banks, specifically $64 billion a year for the top 5 banks, and we know who they are: Citigroup, Bank of America, J.P. Morgan, Chase, Wells Fargo, and Goldman Sachs. And this is an implied subsidy, of course, but it's enough to make the banks potentially most risky. The banks that are the most risky borrow at the lowest rate because creditors know they will not fail. And to put it in perspective, 3 cents of every tax dollar you pay goes to the banks in this permanent bailout system. And then the other part of the story is the fact that the reserves that the banks hold at the Federal Reserve and get interest on. And I did a video on that recently, because if the Federal Reserve raises the interest rate even a couple of points, it's going to be a huge windfall for the banks. And that's going to be the big money shot at the end of this permanent bailout state. But leading up to that, the history goes like this. All major banks are required to keep some reserves at the bank, and they were paid no interest. And it's an interesting fact that before October 2008, the amount of reserves held at the Federal Reserve by all the banks was $2 billion, which hardly seems anything when you consider all their liabilities and all their exposure. But we'll get to that in a minute. So then in 2006, a plan was devised to start paying interest on the reserves held at the Federal Reserve by the big banks, starting in 2011. But then a crash happened in 2007, 2008, and interest was written into the TARP. So they started paying interest to the banks in October of 2008, and they get 0.25%, I believe, is what they're getting paid on the reserve. So that amounts to about $4 billion a year. So what that amounts to, roughly over the last 5 years of the permanent bailout state, they've received about $20 billion in just money handed to them by the Federal Reserve for keeping their money there. So that's just more free money pumped into the banks in the permanent bailout state. And give you an idea of how much they like that system, before October 2008, like I mentioned, they had $2 billion in reserves parked at the Federal Reserve. By October 2008, that had ballooned to $267 billion. And then by January 2009, it had ballooned again to $843 billion, all garnering interest for the big banks. This money that they said they were going to lend is all just parked at the Federal Reserve because it's safe and they can make some money off it. There's too much risk out there. Then we get to now, 2013, and we have a staggering $1.4 trillion in bank reserves parked at the Federal Reserve getting interest. And so anyway, that is part of the permanent bailout system that we have now, run by the government, the Federal Reserve, and the banks. And it's just part of the new normal. And then again, in the 2010, Obama created the Small Business Lending Fund. And then, as it turns out, $2.2 billion of the $4 billion spent on this Small Business Lending Fund was companies that had taken out TARP loans and just borrowed money at a low rate to repay the TARP loans with money that they borrowed again from the government. So they ended up paying their loans with more government handouts. So, and then, of course, the permanent bailout state included all those programs, remember, during the first part of the bailout, the TALF, the TAF, the PIP, the TLGP, and then, of course, we also found out about the all the secret emergency loans, and the figures vary from 7 to 14 to $32 trillion that was given out in secret loans by the Federal Reserve. So that was also another part of the permanent bailout state. And of course, the Federal Reserve is still involved in secret bailouts all the time. Bertley just did a video recently about more $237 billion handout to European banks through the Federal Reserve. And so anyway, these secret loans, of course, can go on all the time until we have another either full or impartial audit. We'll never know. And so there was those secret loans. In fact, Goldman Sachs alone took out $34 billion in emergency loans and secret loans, and their borrowing rate was 0.01%. That's essentially getting money from nothing from the Federal Reserve and squirrel away to these banks so they can go out and gamble some more. And as we know, they weren't giving out loans because they were parking all this money at the Federal Reserve and getting interest. So isn't that interesting? They take loans from the Federal Reserve at 0.01%, and then they repark the money they borrow from the Fed at that rate. They park it at the Fed, and they get a return of 0.25% on the same money. So if that isn't a blatant money-pumping, permanent bailout state system, I don't know what is. They borrow money from the Fed at near zero. The banks put it back into the Fed and get 0.25% interest rate on it, $4 billion a year. So, does anybody see any reason why that's going to end anytime soon? It doesn't look like it. And, of course, all the permanent bailout state has so many other facets. There's too many to mention. The mortgage settlements are all backdoor bank bailouts. Every asset, every side of the the mortgage settlement and all the individual mortgage settlements and all the pay and walkaways, all part of bank bailouts. And that's not to mention the tax deferments. So all these banks can defer tax payments and essentially get refunds back by just putting off their tax liabilities because of their sorry state. And a good example of one thing that this brings up, if the fact that the subsidy to the banks, $64 billion a year, is what the subsidy is worth to them, and that's roughly the amount that their annual profits are. That says that the banks essentially generate break even. They essentially break even. If their subsidy is worth $64 billion a year, and that's roughly equal to the profits, the yearly profits of Citigroup, Bank of America, J.P. Morgan Chase, Wells Fargo, and Goldman Sachs. So that means those banks exist only to siphon wealth to the shareholders and the executives and the bankers, and that's all it exists for. It is not creating anything else other than debt for the rest of the world. And here's another good example of what this means. For the period of 2009 to 2012, of those 5 big banks, Citigroup, Bank of America, J.P. Morgan Chase, Wells Fargo, and Goldman Sachs, they received $1.1 trillion in bailout aid. Just those 5 banks. And they made $180 billion in profits. Most of that subsidized by the U.S. government and the U.S. taxpayer, the Federal Reserve. But get this, here's the best part. Pay and bonuses was $477 billion. That's right, total bailout aid was $1.1 trillion, and pay and bonuses was $477 billion. That means half of that bailout aid and 3 times their profits went to pay and bonuses. So these banks exist only to transfer wealth. All they do is take wealth, siphon it up from the taxpayer through the government, through the Federal Reserve, and they siphon it up and then turn it into pay and bonuses and share prices for their shareholders, for their executives, and to fatten themselves. So anyway, I hope you get a picture, though, that the fact that we have a permanent bailout state. Our government is a permanent bailout state for the banks and corporations. The banks are part of the permanent bailout corporate state. And the Federal Reserve is the Mac Daddy of the corporate permanent bailout state. I'm a useful idiot. Don't you be one too.